Live from ZTN studios in Harare, Zimbabwe. Welcome to our virtual discussion this morning. ZIMCODD Public Finance Indaba 1. Are tax incentives to mining companies justified? This program is brought to you by Zimpaper's TV network ZTN in partnership with the Zimbabwe Coalition on Debt and Development, ZIMCODD. Good morning, I'm your host Andy Hodges. Feel free to share your comments and views on our program this morning on our Facebook page, Zimpaper's TV network, or via our Twitter handle @ZTN News. Zimbabwe's mining vision is central to the achievement of the government's economic growth ambitions and a vital plank in Zimbabwe becoming a middle-income economy by 2030. The mining sector alone is expected to contribute $12 billion to the economy by 2023 and a possible $20 billion plus by 2030. In a bid to attract investors into the sector, the Zimbabwean government appears to be offering tax holidays and other incentives to select mining investors. To interrogate and assess the impact, success or not of such tax incentives and tax holidays, we are joined virtually by Honorable Edmund Mukaratiwa. He's chairperson of Zimbabwe's Parliamentary Portfolio Committee on Mines and Mining Development. Blessing HUNGWE, Small-Scale Miners Secretary General, Southern Africa Women in Mining Association, Mukasiri Sibanda, ZIMCODD Board Chair, and Mr. Wellington Takavarasha, CEO of the Zimbabwe Miners Federation. Welcome to the program. Now, Mukasiri, let me start with you. What are your comments on the tax incentives currently given to the mining sector? And also, do you support or not the granting of tax holidays to mining corporations?
Right. I want to start by highlighting that when we look at our mineral wealth, we see opportunities to have modern healthcare facilities, modern educational services, particularly in the context of COVID, in which we have to bridge the digital divide. The poor and marginalized community getting access to education via digital or online learning. So that's how I see it when Zimbabwe prides itself of its mineral wealth. So that linkage is about government able to raise resources within domestic resource mobilization. Hence, the mining sector should play a critical role. So if we give incentives, let's understand the language. To us, it's not an incentive, it's a discount. You are discounting the opportunity that we have to have proper healthcare services. You are discounting the opportunity we have to have proper educational services. So let's understand that one. Number two, why do people invest in the mining sector? The greatest pull factor for investing in mining is about the geological potential of a country. And if you look, for instance, at the policy perception and at the geological potential index that is produced annually by Fraser Institute of Canada, it shows that along with the DRC, Zimbabwe is highly rated in terms of its geological mineral potential. So that alone is a big factor. Then thirdly, I would want to say the sector, if you read the reports like the United Nations Economic Commission of Africa, the high-level panel report of 2016 that was led by Mbeki, the extractive sector is highly vulnerable and susceptible or prone to illicit financial flows, tax evasion and wage evasion. So the latest UNCTAD report shows that about 40 billion annually is lost from Africa, especially in the gold sector, diamond sector, and the platinum sector, which are anchors of the 12 billion mining plan in our economy in Zimbabwe. So how do you then proceed to give incentives, to give tax discount to a sector that is highly prone to illicit financial flows? How come government freely gives away its taxing right? If you look at the externalization report that was produced by the new dispensation when immediately after it came to power, part of the sector, the diamond sector, were the lead in terms of externalizing foreign currency. So these are the challenges that we need to grapple with. And then lastly, there are other things that we should be worried of that we need to talk about when you talk about tax incentives. Rather than tax incentives, we should be worried about one, policy consistency. It's quite important, that predictability. We should be worried about infrastructure, power, water, roads, and everything. And this is infrastructure that also these mining companies want to use. So who should fund it on their behalf? So I think for me, tax incentives, especially when not done transparently. What do I mean by saying transparently? Do we know the cost of this tax discount? For instance, when we target to realize 12 billion, what is the cost of revenue forgone? The public, there is no transparency and accountability. What is the cost benefit analysis of it? In exchange of tax discount, what are we getting? How are we going to assess these measures? How are we going to monitor these measures? So these are things that we are worried about. At a time when we want the resources to get vaccines for COVID, here we are giving tax incentives and not being clear how much in terms of revenue forgone. So that's what I can say for now.
Okay, Mukasiwe, I want to ask this because empirical evidence has shown that tax holidays don't justify investment attraction. And in fact, studies in Kenya, Brazil, Philippines, and Indonesia attested to widespread governance challenges and corruption linked to tax holidays. I'd like you to just briefly comment on that. But more importantly, critics allege there appears to be a culture in the government of Zimbabwe of what they call opaque high-table negotiations with investors, and granting of tax incentives must be democratized to allow for greater parliamentary scrutiny and public consent. Your comment on those two issues?
Right. To start with, I do second the findings from empirical evidence, and even like I alluded earlier on, according to the policy perception index generated or investor attractiveness index generated by the Fraser Institute, 60% of decisions to invest rest.
Okay, we appear to... Mukasiwe, are you still there? We appear to have lost the sound.
Sorry, I was saying, 60% of decisions to invest in the mining sector are largely based on geological potential. So there's no need to give tax incentives to the sector. And then when it comes to tax incentives, you want transparent. Let there be a law that not only one company should benefit, but that applies to the all companies that are investing, so that at least you need limit room for arbitrage opportunities. You see, so this is something that needs to be managed. Lack of transparency. How did we choose these investors? The Great Dyke is known for its mineral wealth potential. And those investors that are coming in, we should at least have a competitive bidding to choose an investor who offers us greater benefits, looking at fiscal benefits, looking at technology transfer, looking at infrastructure development and other issues. So these are some of the issues that needs to be put into frame when we are having this discussion.
Now, it's a fact that Zimbabwe needs foreign investors to invest in the mining sector for the country to realize value from the minerals and also to attain its $12 billion mineral target in line with the strategy and Vision 2030 of a middle-income country. But in your opinion, can this be done so that, as some commentators state, it does not come at the expense of the rights, sovereignty, and shared benefit of local Zimbabwean citizens?
Yeah, definitely foreign direct investment is necessary. But like I said, it's about understanding what are the areas of attracting investment. Tax is not the only tool in the box. It is folly, I think, to give away our taxing rights. When investors look at political stability, when investors look at infrastructure, look at policy predictability, and other factors that come into play. So I insist there's no need to bait investors with the tax incentives, particularly such deals that are done secretively. Whenever there is change of government, they are likely to be renegotiated again. We have seen, for instance, the change we had laws of indigenization that were reversed. Now they are coming into play. As long as we don't have greater transparency and accountability, and also include an inclusive way of coming up with the accountability, of these tax incentives ensure that they are tailored for the benefit of the whole industry, not to specific players, I think it would be a big problem.
Mukasiri, a topical issue, of course, is the benefit to communities from mining houses that are mining in their areas. And in fact, various reports state that this is not happening, and in fact, except in rare cases, of course, because community trusts were set up apparently by some mining houses. So, in your opinion, how can an effective community responsibility scheme be set up for mining corporations to follow, which can be monitored and made sure that it's implemented to the benefit of the communities in those areas?
Right. To start with is to appreciate what our constitution says from a rights-based approach. Under Section 13, subsection 4 on national development, the state is mandated to put in place mechanisms to ensure communities benefit from resources in their localities. So there is that obligation that is there. But how do you achieve it? There could be many things to many mechanisms that we can discuss. One of it is to say at least 1% share of total revenue generated by the mine must be shared with communities. Take, for instance, a blanket mine. It would mean the Gwanda community was supposed to get 1 million. But with Gwanda, these things, it's a unique situation in the sense that community has got a 10% ownership. So apart from the route of saying 1% at least must be shared with communities of total revenue, the other route is to give share ownership, like in the case of Gwanda, of 10%, but companies, may not declare profits, and that can wreak havoc in terms of revenue predictability development. So the best route will be either to the gross revenue percentage, or to share the royalties. Like 15% countries like Rwanda, they do so, in Kenya and many others in Africa. So it would be good to have like 15% of the total royalties generated must be plowed back in the communities where the resources are extracted. So those are some of the things that can guarantee revenue predictability for development for our communities.
Is there conclusive evidence on the link between tax holidays and any positive economic or social impact? Is there an impact of such deals in promoting such things as undesirable social and environmental effects, weakening good governance, and escalating inequality?
Yeah, I want to refer to the 2015 revenue performance report generated by the Zimbabwe Revenue Authority. About 100 million was refunded, or was siphoned from the national purse as a result of the stabilization agreement, and that is a tax incentive. So look at what 100 million now can do. If an average dose of COVID that we need at most is 10 million, it would cover right now 1 million people. So if you say 5 million, it's 100 million, it means that 10 million people would have been covered. So just look at it, and I'm saying 2015, and bring it forward. Zimbabwe had an opportunity, as per the commitment that was made in the 2019 National Budget Statement, to review the royalty rates in the platinum sector from the 2.5%, which was then below the tax code prescription of 10%. But when the 25-year stabilization agreement lapsed, government did not take advantage of doing that. Palladium, rhodium, gold, those prices, the bumper revenue have been sort of recorded by companies operating in these sectors. But can we say the same of the resources that we have? You can see the struggles that government is having, teachers not getting paid what they really require. There's that element of wage evasion. So the impact in terms of that is also wage evasion. Labor, the civil society, the civil service, teachers, nurses, doctors, not motivated to work very well. There's now adequate equipment, medical supplies to be able to provide the basic health care services. You talk about now the impact in terms of inequality. Those that can afford are the ones that now send their children to private schools, private health services. Some fly to China for it. That's, inequality. I can't afford it, and many others can't.
Let's move to one area, of course, which is of great concern to the nation, and that's tax evasion. Apparently, it's alleged that there are serious tax evasion techniques being carried out in the mining sector. I mean, it is rampant as well in other countries. Zimbabwe is not alone in that. So how and what measures can be put in place to minimize this type of tax evasion, particularly of companies, for example, changing their names after their licenses have run out so that they can apply for a new license? These have been widely reported. Your comment?
Yeah, there are many things I think government is working on, and some things that needs to be prioritized, not in order of importance. The issue of double taxation agreements is something that we need to review to ensure that we don't freely give away our taxing rights. This can facilitate what is called the treaty shopping. I'll give an example. When the indigenization and economic empowerment framework was agreed between government and Caledonia, the investors in Blanket Mine, they immediately located the management company in UK. The idea was to lower the tax burden in terms of the dividends and the management fees, the management fees that they are getting, because to exploit the double taxation agreement between Zimbabwe and UK. So a company that is based headquartered in South Africa and listed then at the Toronto Stock Exchange, found it worthwhile now to have its management offices headquartered in UK, just to exploit that. So there is that element of treaty shopping which we can curb by a review of double taxation agreements. Number two, we need to invest in the laboratory facilities to ensure that we can monitor the quality of the exports that are being mineral exports, and also close some loopholes in terms of the border control. We've had a lot of cases in terms of smuggling of gold, other minerals, and under declaration in the sector. These are the things that to look at. And let me conclude. If you look, for instance, at the data on value, on the volume of exports, in the diamond sector, data that comes from the Minerals Marketing Corporation of Zimbabwe, that comes from the Zimbabwe National Statistics Agency, it does not tally. So it tells you, or even the Kimberley process, it tells you that we need to have transparency and accountability, be part of EITI to improve how we can manage some of the leakages that are in the sector.
Mukasiri Sibanda, ZIMCODD Board Chair, many thanks for appearing on the program this morning. I'd now like to turn to my other guests, and first I'd like to turn to Honourable Edmund Mukaratiwa. He's chairperson of Zimbabwe's Parliamentary Portfolio Committee on Mines and Mining Development. Edmund, welcome to the show. Now, responding to questions on the statutory instrument detailing the tax holiday, as the chairperson of the Parliamentary Committee on Mines and Mining Development, you stated that the tax holiday is a gesture to attract future and potential investors. You equated the transaction to a give-and-take balancing scenario between the immediate revenue losses and the long-term economic gains. Can you expand on this and justify why that would be so?
Thank you very much, Andy. And perhaps to draw your attention to contributions by Mr. Mukasiri, whereby he is talking of giving incentives in the mining sector as tantamount to a discount. So in a way, he is correct if you talk about immediate.
Sorry, Honourable, Honourable, excuse me. Can you just move your camera? I think it's yes. Thank you. Sorry, I interrupted you. Please continue.
Thank you very much. So I was saying, like what Mr. Mukasiri alluded to earlier on, where he says you are discounting, because naturally it means when a business entity is born, it's now supposed to be paying tax. And when it pays tax, it means that revenue is immediately available to the fiscus and can be used for national development in the sense that Mr. Mukasiri explained regarding infrastructure, health facilities, and other things. And I would like to agree with Mr. Mukasiri on the the need for transparency and accountability to that regard, because concerns of the majority are around issues of curbing illicit financial flows. But for there to be illicit financial flows to worry about from a transaction, the transaction must be successful first. It must pass the test of a business proposition, incubated and up and running, generating its own revenue. So look at it this way, from a business perspective. An investor, especially in the mining sector, where it's capital intensive, you need to bring in a lot of money. And we are not talking of buying a business as a going concern. We are talking of greenfields here. You are venturing, can I say, into the wilderness. Vast piece of land and explored. You need exploration. You need to identify where the minerals lie in that strata, how far below the earth, and which mining methods will be applicable. What type of equipment do you need? Special equipment. There is a lot of consideration. And look, at face value, when you probably do geological survey, you may think there is gold underneath or any other mineral, but perhaps only to find it to be a big boulder, useless boulder. So exploration, drilling, and sampling will actually validate. And I'm saying this is the process. The first port of call is to do exploration. And the exploration, you may yield good results. You can validate what you think is underneath, or you can prove that, no, there's nothing, it's not viable. So it's tantamount also to speculation when you start. And maybe to talk the language of bankers. Bankers would treat such a venture as greenfields. And usually, bankers at inception of greenfields, they are risk averse and they do not want to fund such ventures. So you find that whether the investor is borrowing to fund his newly found operation, mining operation, or whether he's taking the funds from his reserved pool of funds, any funds advanced in a business setting is deemed to be borrowed in terms of making commercial sense. So it's discouraging. It's like just shooting into the dark and you hope to probably land something that is meaningful to you. So this is where I'm saying, yes, you can look at it from a point of view of losing revenue by way of discounting, but you also want to encourage investors to invest in greenfields, which are naturally, by and large, discouraged by even financial experts like the banking sector. So for you to encourage the investors, you need to give them tax incentives. And Mr. Kasiri talked about national development, but we are more on perhaps the human capital, the human development. So when it's a greenfield, the minerals might be lying in abundance underground, but they are not accessible for one to take to the market to trigger revenue until someone quantifies, verifies, starts extracting and processing, and there may be need for smelting, refining, and perhaps value addition, and there are other business
So Edmund, can I ask you though, how do you, it's a balancing act here, because on the one side you're advocating that tax holidays and tax incentives to attract more investment into the mining sector, and the other side, of course, it's tax revenue being lost, particularly bearing in mind Zimbabwe's current fiscal space. So how do you balance that? How do you make sure that the benefits of the tax holidays and tax incentives are outweighed by the investment and the return coming from the mining sector compared to the loss of revenue to government?
And this is where the government comes in, because the citizens would want to see immediate benefit, whereas the government is faced with the balancing act to create policies that will encourage investors. Because if you don't encourage investors to actually get involved in organized mining, which will in the long term benefit the broader fiscus, it means that particular piece of land, if you open it up, it can also be vulnerable in the sense that it can be exploited by illegal miners, so to speak. And illegal miners, if I can put it that way, 9 times out of 10, they do not help the broader fiscus at all. They do not help in infrastructure development. They do not help in human development, because they just look for quick gains. They don't go into the formal market in terms of what they get from the extraction. They are carrying out illegal activities. So you cannot bank on that. So the government comes in to play the balancing act. They are representing the people. They want the people to benefit. And if they open up in an unorganized and unprofessional way, which actually deters accountability, because you cannot account for something that you have not explored, that you just speculate that is underneath. The government will then need enabling policies. They will need to come up with the incentives that will attract those investors who want to carry out long-term investments. And when they do that, they do it in a reasonable and viable way that will attract
Edmund, I'd like to bring in some our other guests. As I said, we're joined by Blessing HUNGWE, Small Scale Miners Secretary General and Southern Africa Women in Mining Association. Blessing, interesting there from the Honourable Mukaratiwa. He said that small-scale miners, I want to throw this at you, are doing illegal activities. They don't benefit the fiscus. You can't rely on them. I think that pretty much was his quote. So maybe you could comment on that. But I'd also like you to comment on your opinion on the current tax holidays and tax incentives in place. And also, because you obviously represent women in mining, advocating for specific tax incentives that can be put in place for women miners.
All right, thank you very much. I'll disagree a little bit with Honorable on the small-scale miners not benefiting to the fisc. The small-scale miners, when they mine, when they get money in the communities, the money circulates around people in the community. So I would say artisanal and small-scale miners bring money in the communities and they circulate all the money. They promote the locals in the communities. And artisanal and small-scale miners, they need the tax discount because like right now, it's 1%. Fidelity printers, when you sell your gold to Fidelity printers, they take, it's now on 2%. It used to be 1%, of which we actually say it's better if it remains on 1%, because the money that small-scale miners are bringing, it's actually circulating in the community. It's actually going around in the communities. And it has to be streamlined. Look at how small-scale miners are paying. They're paying to the RDC, they pay tax. They pay to ZINWA, they pay tax. They pay to EMA. It has to be one-stop shop. It has to be streamlined. So I feel artisanal and small-scale miners have to have a fee, which is paid on one one place where they just go and pay their tax on a one-stop shop.
Okay, so let's get to the tax holidays being given. I mean, what is your opinion on these? Do you support tax holidays being given, especially to greenfield projects or foreign investors that are coming into the country? And of course, my second part of the question is, do you think there should be some form of tax incentives for women in mining as well?
Okay, I don't support tax holidays given to companies coming in, investors coming in, because we've got the resource. Our geology is very good and we've got big resource. When they come in, the tax has to come in so that women in the communities benefit from it. Hospitals, clinics, roads, and they need the roads to export their resource back, to export it. So these things has to be done. So I don't support tax holidays. I actually want the investors to come and pay tax so that the communities are developed. And women in mining, incentives, yes, I support. They have to get incentives. These people are mining and they're promoting livelihoods. I mean, mothers, let's take, for example, artisanal miners in rural areas. When they get their money is going to food for the family. Their money is going around the community. They look after the family, their livelihoods and everything. They need tax incentives. They need tax incentives because their money is actually circulating in the community. It's benefiting the whole community when it comes to women. These are mothers in the community.
Let me turn over to Wellington Takabarasha. He's the Chief Executive Officer of the Zimbabwe Miners Federation. Wellington, you've heard the views expressed by my other three guests.
Sorry, and if I may interject, please. Sorry.
I'm sorry?
I've been raising my hand.
Oh.
Sorry if I
Okay, very briefly, please,
my hand.
Okay. Please, can you respond briefly? Because I want to ask Wellington a question. Please go ahead.
Yes, I wanted to just clarify. I think the previous speaker did not get me correct. I cited illegal miners. I did not say small-scale miners. And I was speaking on the advantages of long-term investment, structured investment. And when you carry out exploration, when you do the initial developmental stages of any mine, there is already employment that is created in the initial stages. People are being employed.
Okay, so clarification there. So you're talking about illegal miners. They're the ones whose activity goes under the radar, so to speak, and don't contribute to the fiscus. Thank you for that clarification, Honourable. Wellington, let me come to you. You've heard the other speakers, as I said previously. So what are your comments on these tax incentives and tax holidays? And in your organization's opinion, should they be given to mining corporations? I mean, because this is not unusual, is it? I mean, it's not like Zimbabwe is the only country in the world to be giving such sort of tax holidays and concessions. Your comment? Wellington?
Hello?
Yes, please continue. You heard
my
question? Yeah, we can hear you. You heard my question?
Right. Now, to begin with, I would like to actually start off by commenting on the tax regime in Zimbabwe to the mining sector, especially with regards to the artisanal small-scale miners. Before I look into these tax, whatever incentives that have been given to the foreign companies. So what is happening is, as mentioned by the other speakers or panelists, yes, you notice that there's tax incentives in terms one, the reality which used to be on 5% and went down to 3% and later on to 1% and raised again to 2%. So these are some of the issues that we'd like to look into to say, are we really benefiting from that tax incentives? How many of the miners are actually in the bracket of remitting gold to fidelity printers and refiners? What percentage do we have that is actually involved in the mining sector that is remitting gold to fidelity printers and refiners? So we have looked into issues regarding policy making where we are looking at situations where 84% of the people, as Honorable
Hello, Wellington? Okay, I see. It seems we'll come back to Wellington once we've...
as indicated are illegal miners.
Once we've... oh, yes. Okay, please continue, Wellington. Yeah, please continue. We'd lost you for a moment there. Please continue.
Yeah. Oh, okay. Right. We have also seen that there's been suspension of duty on goods imported specifically for mining activities. That is on the ZIMRA side. But that the time period that
okay, we appear to be having some connectivity problems there with Wellington Takavarasha. Blessing, while we get Wellington back on the line, I will come back to him. Blessing, let me ask you this. Critics... Oh, Wellington, are you back?
Yes, I'm back.
Okay, please continue. Sorry, your sound keeps dropping. So please continue and finish your thoughts.
Okay. Before, I don't know what's happening with my network, continuous interruptions. But right. Now the tax regime, as I've indicated, now Blessing has actually indicated that there is a tax regime that has to do with the RDC Act of 1976. We have also ZINWA, we also have PACs, and also maybe taxes from the Minister of Mines with regards to activities that involve the explosives, etc., and then environment management. So these have
yes, we do appear to be having some network problems. So while we look into that, let
affected. You know, your target in terms of the.
Yeah, please continue, Blessing. Sorry, please continue.
Yeah, I can hear you.
Okay, please continue.
I was talking about the tax band in the country, the tax band that involves a number of government entities which have got some mining levies to do with the artisanal small-scale miners. We've got EMA, Environmental Management Agency. We've got the RDC Act, Unit Tax Act of 1976. We've got ZINWA, we've got PACs, and all these need to really to be holistically looked into so that it doesn't burden the artisanal small-scale miners. What is the zero base of these particular activities? How much is it to actually calculate to get a gram? What do you need? What is your input? The cost-benefit analysis of somebody to get a gram. So looking at this, we need a holistic approach and involve all the government departments that they're doing with mining so that there is no, muscling of actually getting a piece from the mining activity.
And what is your comment then? What is your comment then on the tax holidays that have been given now by governments, especially to? What is your comment on the tax holidays being given by government now to new investors in the mining sector? What do you support them? Do you support this or not?
No, I'm not on the support. I'm not supporting that. I'm not supporting the taxes that is being given to the foreign companies, because the benefit, what is it exactly that they're benefiting from that?
Okay, so, but I mean, surely you appreciate that an investor coming into the country has to spend millions, if not billions of dollars on new projects, particularly with greenfield. And I think that the practice of giving tax holidays or some form of tax concessions is not only restricted to Zimbabwe, it is a worldwide practice. What would you say to that? Okay, we appear to have lost Wellington there, but I will get back to that question to him. It's an important question. Blessing, let me come to you. Recently an investor was granted a 5-year tax holiday, and that appears, commentators think, to contradict Zimbabwe's government's austerity and deficit reduction policy thrusts. They allege that it allows corporations to keep money that they do not need to stay operational, whilst denying the state millions of dollars in revenue, much needed, of course, in the context of increasing poverty and inequality. Would you subscribe to that thought by various critics and commentators?
Andy, 5-year tax holidays, it's too much. The government, I don't agree to that, because if we give these companies 5-year tax holidays, when we don't have medicine in the health sector, So, and when the roads are not properly done, there's so much that needs to be done in the communities where these mines are operating. Then we can't give a 5-year tax holiday. So I totally disagree with that, because I totally disagree. There is so much that needs to be done in the community, especially women. There are women still giving birth to children on the road. There are no facilities, are not good, but they are coming from those communities where companies are being given 5-year tax holiday. So I disagree with that. I disagree with the
Okay, all right. Now I am going to go across to Honourable Edmund Mukatiwa to respond to all my other guest comments. But before I do that, Blessing, let me ask you this. Do you subscribe to the opinion that deals in the mining sector are opaque and not transparent and possibly are not scrutinized?
Yes, I agree to that, Andy. I think if deals are transparent, then everybody knows what the deal is, how it's going to benefit the community. Section 13, subsection 4 of the Constitution says the government is compelled, the state to put mechanism, the government is compelled to put mechanism in place so that communities benefit. So if deals are transparent, communities know how they are going to benefit. So I am actually saying deals should be transparent and should be put on place so that everybody knows what the deal is all about.
All right, let me cross to Honourable Mukatiwa. I think it's important that you now can respond. I mean, you've heard the views expressed by my other guests. They are both, in fact, all of them are against the tax holidays. They believe it's too long and money should be spent on more essential services, hospitals, health sector, education, and even social protection. And they also, Blessing particular states that the deals in the mining sector are opaque and not really subject to the oversight of Parliament. Of course, you are the chairperson of the Parliamentary Portfolio Committee on Mines and Mining Development. So what would be your comments to what my guests have put forth?
Thank you very much once again, Andy. And perhaps let me start by drawing your attention to the international norm. The issue of tax holidays is not peculiar to Zimbabwe. We have examples of countries like Australia, where capital redemption allowances have been implemented. For example, in the first year of mining corporate establishment. And in Australia, once again, the other side of the coin, so super profit tax. It's all about being pragmatic, considering ongoing conditions in a country. At one time, it was a topical and controversial issue, but eventually they ended up having consensus. And when we narrow down to the most recent issue, you are looking at developing a mine. Someone is bringing in capital. You want to tax that capital or you want to tax profits. I think let us perhaps look at it closely. Someone is investing capital so that he runs a business that will bring profits. As he gets profits, you can tax him and the fiscals can benefit. But if you kill that initiative at the onset, then it means in the long run, you won't benefit anything. I thought I should actually make that clear. Then, because this issue is remaining topical, and I just wanted to say it's not about international investors alone. There's an element of local investors. But let me speak to the involvement of the government, like in the case of Kuvimba. And maybe the questions that I can pose is, did Kuvimba bring into the matrix some form of capital injection that you probably know about? I'm talking here, I'm referring to where the government is involved to justify its stake its stake, it means the government should also raise some form of capital. This is a private deal. This is why I want to refrain from probably commenting on it, but I just want to look at it from a sound business perspective, whereby if government is involved, it means they want to partake of profits that will be generated thereof. And this speaks to state-owned enterprises. And we have seen challenges to do with how state-owned enterprises have been run in the old dispensation. And the new dispensation now is about bringing sanity, justifying a business case, opening up to enable transparency and accountability, to enable a business venture to generate profits, so that those profits will find their way into the fiscal. For that to happen, it's a private deal, but yes, obviously issues of capital will come in. And tax holiday can also be another way of also justifying business involvement. But perhaps let me refer to maybe one of the oldest and perhaps the biggest mining venture, which also enjoyed a tax holiday. When BHP we had enjoyed a tax holiday, sold its stake to Zimplants, there was continuity. So one cannot cry and say after 5 years, BHP deserted, because that business today is still benefiting the nation because Zimplants took over for continuity. So, and there was around 15% of government almost in the same model, and that was being run under an established BHP trust.
Yeah, but Honourable, Honourable, but let me ask you this though. I mean, obviously then there could be criticism then that government may be bringing tax holidays. You mentioned that the projects that we're talking about, or the one that got a 5-year tax holiday, private deal, but the government was involved. So obviously criticism can be levied that the government may be giving itself tax incentives to its own benefit, or to the benefit of its fellow investors. That's number one. And secondly, your comment on the opaqueness of deals, because commentators say that they can't find any information on what these deals are or what the terms and conditions are. And I mean, many times people have thrown this issue of a non-disclosure agreement as a reason why the public don't know about this. But surely you are Parliament, you represent us, you should be able to scrutinize these deals, even if it's a small handful of you, to get a full picture of exactly what's happening on behalf of the people of Zimbabwe. Your comment?
Yes, we've discussed this in the past, and this is where I say we have limited access to some of this deal, but the Parliament is actually mandated to actually maybe take sight of some of these deals and approve. And this is where we continue to lobby as Parliament. We continue to try and make sure it is enforced so that there is transparency and accountability. And also, it would actually help to actually involve the public at an early stage, because people are always thinking, because the fact that some human beings are thieves, in my own, it doesn't make everyone a thief. So we have honest people in government trying to conjure honest business deals to protect public interest. So they must be given space to do that. As Parliament, in our oversight, we must also be allowed access. And I'm saying we've had limited access in the past, and this new deal that we're talking about is something that is happening, and we know about the COVID times, whereby we are all working from home, and the government business must carry on. It must not be stifled. But at an opportune time, as the Portfolio Committee on Mine and Mining Development, we will seek to take sight of the document, to interrogate them, and to put the record straight. But I thought our focus here is on whether tax incentives for the mining sector are good or bad. This is why I said it's a give and take. And when you look at it, it must be circumstantial. And you consider the circumstances. And my first value analysis of the circumstances is it's good under the circumstances because most businesses are having pressures which are almost discouraging them from continuing with the investments, because when they made those decisions, those were business decisions based on due diligence that was associated with the existing external environment at the time, which was free from COVID pandemic.
Right. We actually also reached out to Isaac Kwesu. He's the Chief Executive Officer of the Chamber of Mines. Unfortunately, he was unable to make it on the show, but we did pose some questions to him about tax incentives. And I'd just like to read you a snippet of his response. He said, tax incentives are common in capital-intensive sectors that include mining and infrastructure sectors. Projects in these sectors are highly risky, have long gestation period to recoup, cost incurred in huge capital outlay. Tax incentives in the Zimbabwe mining sector, though lagging behind the global norm, is fairly comparable to peers in the region. Most mining jurisdictions, just like Zimbabwe, provide special initial allowances, carryover losses, and deductibility of royalty for tax purposes. He also said that governments normally provide tax holidays to such projects to ensure viability and going concern, especially at the early stage of operation, where most projects incur losses, and if there's any profit, they normally plow everything back as working capital. So the Chamber of Mines is saying that, look, tax holidays in the mining sector are actually normal, and they are actually reflective of our peers in the region. However, of course, the discussion today, of course, is, are they appropriate? Do they give us the social, the economic benefit tax holidays give? You're watching our virtual discussion this morning. ZIMCODD Public Finance 1, Indaba 1. Are tax incentives to mining companies justified? This forecast is brought to you by Zimpaper's TV network, ZTN, and our partners, the Zimbabwe Coalition on Debt and Development, ZIMCODD. Blessing, in fact, I'm not sure if Wellington is back with us. I'd like to move on from this, because one question, Wellington, that the critics are putting is that should Zimbabwe explore alternative investment options in the mining sector, underpinned by issues that really feed into this, for example, Sustainable Development Goals. Here I'm talking about commitments to climate justice, national ownership, wealth redistribution, community consent, democratic oversight, for example. Do you think that there could be a strategy to replace the current way we're doing deals in the mining sector with more an alternative method? Wellington? Wellington, I'm not sure if you're on mute. Please, can you unmute? All right. Well, okay. Well, we'll have to keep trying to get back to Wellington. But Blessing, I hope you heard my question there. Did you hear my question? Will you be able to respond to that? Is it practical for Zimbabwe to look at explore alternative investment options that take into account issues such as climate justice, national ownership, wealth redistribution, community consent, etc.? Blessing?
Yes, I think yes, there's an opportunity for Zimbabwe to explore other investment, and especially let me touch more on communities accepting a project or investment in their community. It is very important for things to be done transparently.
Are you able to put your camera on, Blessing? Sorry, are you able to put your camera on?
Okay.
Thank you.
All right. Okay.
Sorry about that, but there you go. There you go. Please continue.
It is very important for communities to understand what type of deal and investment is coming into their community, so that they give consent to the project coming in the community. The problem is there's a discord because the community does not understand the project. The people who are in the community don't understand. It's not done transparently. They don't even understand how they're going to benefit. They don't even understand the benefit. If all these things are done transparently and they're put on the table and people understand and communities give their consent to a project which is coming in, I think things would flow. So transparency is what is needed, and holding government accountable as well. Like, for instance, the deal we're just talking about with the 5-year tax incentive. It's either the government probably is giving that incentives because of their contribution they're going to put in, but because it hasn't been laid down, we don't understand why the incentive is being given, because this deal has government inside. So if things are laid down and are transparent, then this is welcome. Investment is welcome, and we need to move on. We need investment. Communities need to grow. Communities need to go, but communities need to know what is happening.
So, Blessing, it's interesting because some quarters have been calling for government to enact an Economic Empowerment Act. Now, I know we've had Empowerment Acts in the past, which obviously suffered a lot of criticism, but some are calling for this in the mining sector, which clearly outlines how local people can benefit from the mineral resources as provided for them in the Constitution. They further state that corporate social responsibility is noble, and the new Economic Empowerment Act could advance the provisions of financial management under the Constitution. So your comment, do you think that such an Economic Empowerment Act in the mining sector is a viable and workable recommendation?
Small-scale miners, yes, are calling for especially small-scale mines to be only for Zimbabweans, to be left for locals and not for foreign investments, which is a good idea, because look at what the Chinese are doing. They are coming and being small-scale miners and getting benefits. Unlike the Zimbabweans are supposed to benefit that. Small-scale mines should be left for Zimbabweans and for Zimbabweans to benefit, not for foreigners. Then there are projects that are given to foreign investments. But I totally subscribe to that. Locals, or small scale, should be left for locals.
Edmund, let me come to you, because it is an interesting thought that some quarters are calling for the implementation of an Economic Empowerment Act. You've heard Blessing there. I mean, would it be workable to say such a section of the mining sector should be left for local investment and the balance for foreign investment? What would be your thoughts on the introduction of such an act? Edmund, I think you're on mute.
Thank you very much, Andy. Basically, talk about empowerment. Every citizen of this country deserves to be empowered. And to talk about the mining sector, we have a lot of interest, but the challenge is that capacity to access funding and to fund it maybe at individual level. So there are various models that we can explore. And perhaps, if I may mention the BHP model, which had about 15% embedded in the share structure, and the 15% was reserved for entrepreneurial funding activities. So when that happened, it means small businesses will be nurtured, small businesses will be funded, and they will benefit from the investment by a large-scale operator. So this is one model which can actually be considered in line with our indigenization laws.
But Edmund, if I'm not mistaken, on the BHP structure, that 15% was never taken up by locals, was it? At the end of it, in fact, the 50% is still in abeyance and was never actually ever taken up by any consortium or locals at all. So I'm not sure how locals benefited.
We probably need to take a closer look, research on it a little bit further. You would notice that it continued. Of course, it was administered by a trust at some stage, but
But are there any
continuity companies, implant.
No, I mean that you think can contribute.
Corporate social investment portfolio.
Sorry, Blessing, can you mute your microphone, please? Thank you. All right.
Sorry, there was a little bit of noise.
Yeah, so you're right. You know, as I was saying that, you know, I can prescribe, you know, it makes sense to say that any kind of foreign investor coming into the country, there should be a portion of their shareholding for locals. But I think the BHP one may be an example that you'd have to look into closer, because to my knowledge, that 15% shareholding was never actually taken up by locals. And even when BHP transferred to Zimplatz, and I stand to be corrected, it still wasn't given to the local investors. So, but I see your point in the sense of a model to follow. Edmund, in fact, Blessing, let me ask you this. We want to move on to communities, because you mentioned this before. You know, community trusts, we heard reports in the press, $10 million given by certain mining houses to community trusts, not just in the, you know, in the diamond sector, in the gold sector, etc., and in the platinum sector. And some, of course, have worked. If you look at the platinum sector, particularly here close in the Midlands, you see that they have been putting in community funding or corporate responsibility programs in their areas. But it hasn't really worked, has it, in the communities countrywide? Blessing, your comment.
Community ownership trust haven't really worked in the communities. Not many communities have benefited from not many communities have benefited from the 10%. I remember it used to be 10% of the community ownership trust. I know of Mazoe, the community, they haven't benefited anything. Look at the Gurue community, where there's large resource. There's very big resource. They haven't benefited anything from the community ownership trust. So really, I don't think the community ownership trusts are working and they're benefiting communities. So I think there has to be another way of making communities benefit rather than the community ownership trust.
Okay, Blessing, before I cross over to Edmund to talk about these community ownership trusts, because they are important, I want to just quickly go back to tax holidays. It appears that they are being given, obviously, to investors coming in, particularly greenfield investors in the mining sector, but details on how similar corporates can access or qualify for the same holidays are not really in the public domain, and that may raise tax justice concerns. What would you say to that?
Andy, that's why I keep going back to transparency. If these deals are transparent and if they come into the public domain and everybody knows that there is resource in Chinoi, there is resource in Gurue, there is resource there, and companies who want to bid, everything is put on public, and the public knows, the community knows, we all engage each other, and we know what is happening, then we won't have a problem. So the problem here is there's no transparency in the mining sector of how deals are won, where they are not publicized. People don't know about the deals. The communities don't know about the deals. So there needs to be transparency in the mining sector, in how deals are allocated, in how the deals, how are they, who won the deal, how did that person win the deal? So transparency is very important.
Edmund, let me come to you. I think it's a two-part question, if you don't mind. The first one, of course, is the lack of success of community trust schemes that were put in place, and they were highly reported in the press, and then it subsequently turned out that some of them just didn't get off the ground. I think I'd like you to comment on that, and how your committee can ensure, for example, that these trusts, because it's constitutional, how these trusts can be put in place, monitored, and implemented effectively to help the communities. And also, secondly, as well, you know, the criticism that the government is giving tax holidays to specific companies. However, how do other companies access that? What details do they need to get? How do they get the details of applying for a tax holiday as well? Particularly even local companies. Can they apply for tax holidays? Is there a mechanism for them to do that? And if so, what is it? I think there's a two-part question there, sir.
Hello. Thank you very much. I agree with you that community share ownership trust, while the idea was very noble and it was meant to benefit communities in perpetuity, it's not working. In short, community share ownership trusts are not working for various reasons that probably we already know. One of it is probably, if we go back to basics, the way the deeds of trust were probably crafted. There are gaps there which mining corporates are exploiting. And if I may sum it up and say, what we hear, what we see every day is greenwashing under the guise of community share ownership trust. So we need to relook, we need to rethink the impact that we want achieved by what community share ownership trusts were supposed to do. And perhaps this is why in coming up with the Mines and Minerals Amendment Bill that was seized with at the moment, we have resolved to incorporate principles of corporate social responsibility so that we don't leave it up to the mining companies to actually determine or prescribe what they want to give, or many times do greenwashing. We want it to be compelling, a bit of hard rather than softer laws to governing the whole framework. But of course, we have a lot of work in terms of aligning some of these aspirations and consolidating our laws, especially amalgamating with the indigenization law, which, as you now know, is under the purview of the Minister of Industry.
Oh, and your comment on the tax holidays. I mean, if I'm a local company and I want a greenfield project, how would I apply for a tax holiday? Or is this just subject to these opaque deals, as it was called by commentators earlier? You know, between government under this cloud of secrecy. How do people actually would apply for these tax holidays if they felt they justified and they needed them?
I think if you have been following up, there is a common trend in terms of agreements that have been done so far, which agreements have culminated into the operators tapping from the tax holiday incentive. It has always been part of initial negotiations and the agreements. Of course, you want to call those agreements opaque, but I know the executive are mandated to actually negotiate any deals. You know, that's their work is part of their job description and in terms of reference. What's missing? The missing link is the involvement of Parliament. And this is where we are saying, while there's limited access, we are lobbying, we are striving for excellence to see that we are given that opportunity to also introspect and intervene when some of these deals are actually being negotiated, so that we also help the Balancing Act oversight, and also it will guide us our monitoring and evaluation efforts thereof.
All right, let me ask you both a final question, starting with you, Blessing. It's reported that Zimbabwe could be losing as much as 60 kgs of gold per month, especially to the Middle East, and that doesn't include, of course, possibly gold smuggled into neighboring countries such as Mozambique, Zambia, Botswana, South Africa, through organized syndicates. And it's back to the small-scale artisanal mining sector, I would assume. And the fact is this, is that how would you propose, and you represent some of these members, how would you propose that this rampant type of smuggling, especially of gold outside Zimbabwe, is curtailed and even stopped?
Firstly, I would propose formalization of artisanal and small-scale miners. Like the other time when Honorable just spoke, he spoke of illegal miners, and I took it to be artisanal small-scale miners. That was, but now the formalization, at least to know these are illegal miners. These are to formalize artisanal and small-scale miners. If artisanal and small-scale miners are formalized, then the selling of the gold and everything will go correctly, will avoid the illicit flow of the minerals. People will go and sell to Fidelity. And I also propose the prices at the Fidelity. Look at what Fidelity, at least now, I'm actually grateful. Fidelity has actually reviewed, and now they're paying in US dollars, which is a lot better. But still, their prices are a bit low compared to the black market is there, and the black market will be offering prices to especially artisanal and small-scale miners. So a person will end up going to artisanal and small-scale to the black market. But if ASM is formalized correctly and the flow is done correctly through Fidelity printers, then there won't be the illicit flow. And also, if the percentage, the tax we're talking about, the tax incentives, look at, like I was talking about the incentive, which is the tax paid to ZINWA, tax paid to EMA, tax paid to RDC. They're all paid so differently. If this is put in one, you have to, in one-stop shop, and the taxes are paid in one-stop shop, then ASM, it's easier now for artisanal small-scale miners. So because of all these things, artisanal miners end up going the black market way,
right.
Because it's not properly formalized, and they don't have a one-stop shop for everything. So formalization of artisanal small-scale miners will help to scale down the...
Okay, Edmund, but I have to ask you to answer briefly, because we are coming to the end of our program, and it's a very interesting and informative program we've had this morning. But your comments on this smuggling, I mean, 60 kgs of gold a month, that's a huge amount of foreign exchange that could be earned for the country. What would you say? How would you stop it? Edmund, can you maybe unmute, please?
Hello,
very briefly, sir, how would you stop this rampant smuggling, particularly in the gold sector? 60 kgs per month, some reports give us. If you could be very brief, as we are coming to the end of our show.
And I think it's a simple question of enforcing the law, because the law does not encourage that. So we need to make sure the law enforcement agents on it, and they actually have a bliss to stop that. But
don't you think also the pricing, I mean, if the pricing was attractive, it would also stop that? If the pricing was attractive, it may also stop that type of smuggling, because you can get the right price inside the country.
That's where I was coming to. I'm saying we also have got a market. So we need the market to offer incentives to the producers, to the miners, so that they are discouraged from participating. If there is no difference with what they get on the parallel market, for example, if it becomes more attractive in the formal market, that way they are naturally persuaded rather than compelled. So we also have to look at the external factors affecting the marketing space.
Thank you very much indeed. Unfortunately, I have to stop you there. I do apologize, but I have to stop you there, because we have come to the end of our show this morning. So I do apologize for stopping you there. As I said, it was a very vibrant and interesting discussion. And of course, our show this morning, ZIMCODD, Public Finance Indaba 1, our tax incentive to mining companies justified. This broadcast was brought to you by Zim Papers TV Network, ZTN, and our partners, the Zimbabwe Coalition on Debt and and Development, ZIMCODD. I would like to thank our guests, Honourable Edmund Mukaratiwa. He's chairperson of Zimbabwe's Parliamentary Portfolio Committee on Mines and Mining Development. Blessing HUNGWE, Small-Scale Miners Secretary General, Southern African Women in Mining Association. Mukashiri Sibanda, ZIMCODD Board Chair. Mr. Wellington Takavarasha, he was the CEO of Zimbabwe Miners Federation. And of course, we did get a comment from Mr. Isaac Kwesu, CEO of the Chamber of Mines of Zimbabwe. Ladies and gentlemen, many thanks for appearing on the show. A final comment. What is an undisputed fact is that Zimbabwe needs investors, especially foreign investors in its mining sector. What appears open to debate is what type of investment does Zimbabwe want, and under what type of investment model? Government argues that giving mining investors tax incentives and tax holidays will consolidate and attract investors into the sector, although there appears little evidence from studies carried out in numerous other countries that this is true. There's nothing wrong with the government giving tax incentives or tax holidays to investors. However, the long-term returns and benefits to the nations must be assessed and weighed against the loss of tax revenue. Zimbabwe must further be assured that investors carry out their end of the bargain and invest long-term in the country. Communities affected by mining operations must benefit. Small-scale and artisanal miners must benefit, and critics are calling for more transparency in how mining investments are negotiated and greater oversight by the institutions responsible for this, especially Parliament. Tax evasion and, more importantly, the smuggling of minerals, especially gold, outside Zimbabwe must be stamped out. The mining sector has the potential to earn Zimbabwe billions of US dollars and play a leading role in the economy, but it must be done transparently, jealously monitored, guarded and nurtured to ensure this happens. A win-win for both investors and the nation is imperative. I'm Andy Hodges. Goodbye, and you all be safe.